The following segment is sponsored by Daniel A. White and Associates.
News and issues that affect the first state. Stay tuned for Del Aware PM Edition, starting at 6. Now, back to the Rick Jensen Show on WDEL.
Well, right now, if you're looking at your retirement accounts and you're thinking, oh, this isn't good. And if you're a client of Dan White and Associates, you're probably looking at yours going like, whew, boy, that was close. Now, I've been a happy camper client of Dan White and Associates for many, many, many years. And every Wednesday after news at 1:30, one of their professionals calls in with a timely tip. And Dan Simon's on right now from the Middletown office. By the way, folks, you might listen to Dan Simon and say, oh, he's a pretty good guy. I want to talk to him. He doesn't charge anything, and you can give him a call at 888-690-8820. And, Dan, this is one of these times we talk about when you look at your investments, your 401k goes up and down and up and down. And, you know, if you're closer and closer to retirement, it's a little nerve-wracking, isn't it?
It can get a little bit nerve-wracking. I'm a few years from retirement, Rick, so I'm steady and holding. But how are things today? How you doing?
I'm peachy. I'm doing well. Look, I'm very, very glad I've got some money with you guys, and it's doing quite well. And even with the the ETF of the S&P 500, that's been doing fine for a number of years, and now it's sliding. But I'm one of those. I will hang in there because I feel like I have a pretty well-balanced portfolio.
Yeah, so, Rick, that really takes me to exactly what I wanted to talk about today, and that was, we don't want to see folks rely solely on the stock market for retirement income. I think it's one of the biggest risks retirees face if they're depending entirely on the markets to generate the retirement income. Now, we all know the markets can be an excellent tool for long-term growth, but they're also volatile. And, markets go up, they go down, sometimes dramatically. World events with what's going on in the world today, it can be a serious problem when you're withdrawing income from that portfolio. And, the reason why is that, while we're still working and we're contributing to retirement accounts, market downturns can actually be helpful because ultimately what you're doing, you're dollar cost averaging, you're buying investments at a lower price. But in retirement, the situation completely flips around, where if the market drops and you're forced to sell investments to generate income, you may be ultimately selling them at a loss position. And this creates something what we refer to as sequence of return risk, where early market losses combined with withdrawals can permanently damage a retirement portfolio. So, for example, if the market goes down 20% and you need to still withdraw 4 or 5% income from that account to meet your living needs, effectively, you may be down 25% or even more. So it makes the recovery that much harder. So when we think about, retirement income and implementing different strategies, I really believe that a multiple income source approach is really best when we take into consideration the volatility that we know is inherent in the market. So we've got to incorporate Social Security, pensions, guaranteed income products, dividend or interest income products in retirement. And then really kind of the last phase is the investment portfolio. And we should really be looking at that portfolio for long-term growth and non-guaranteed, non-necessary income in retirement. So by combining stable income sources with growth investments, retirees should be able to reduce their overall risk of having to sell assets during a down market and create a more reliable retirement paycheck. So again, diversification at the income level, I think, is paramount for a secure retirement strategy.
And every person's situation is individual, which is why you got to sit down with an individual and say, okay, individually, what do you want to achieve? What do you want to do? What's your comfort level? Things like that. I remember years and years ago,
exactly.
I was 80% in the markets and 20% in any kind of cash, like a money market, something like that. Well, let me just tell you that changed over the last couple of years or so, and now I'm like 80% in guaranteed incomes and such. Of course, whether it's insurance-based or money markets, and 20% in the stock market. So, yeah, I totally get that because I'm looking at my returns and thinking like, there's no return right now, and we don't know how long this is going to go on either.
We don't.
Yes.
We don't. There's a lot of uncertainty out there, and I always kind of look at it from a foundational standpoint. we know Social Security's there, but that's usually only making up to 30, 35, maybe even 40% of someone's retirement income, meaning they're relying on their life savings for almost half of what they need coming in on a monthly basis. Is it worth risking it? Is it worth subjecting yourself to the ebbs and flows for half your income in retirement? And for most people that I see, Rick, the answer to that question is no. They don't want to stomach, or they can't tolerate that level of risk. So it's, that's the protection of assets and designating it for ultimately the purpose. And purpose should determine the placement. And if the purpose is income, the markets are obviously volatile today, and perhaps not the best ideal solution for retirement income.
You mean I shouldn't put all my money into an oil company? Just kidding. All righty there. So,
well, if you can time these ebbs and flows we're getting over 24 hours, I mean, it's pretty fascinating. But yeah, that might not be the best idea. Right?
Yeah, I know. I've talked to a lot of people about market timing. Pretty much not something that works for the 99.9% of any investors. And Dan, I know you always talk about having guaranteed retirement income, and that's the big deal. Folks, you can give them a call at 888-690-8820. Anything else you want to share with us?
Well, when it comes to market timing, I always kind of, make the joke a little bit. But if somebody could time the market, I wouldn't have a job. I know that much. And I'd have my money with them. So life would be good. So, it's been proven over and over again. Timing the market, it may work. You may get lucky a couple times, but long term, it's a very risky strategy. Yeah. We all know that.
Easier to count cards at the poker table.
Predictable returns.
Hey, yes, that's right.
You got it. It.
Okay, so Sunday morning at 7 o'clock, make sure you're listening to WDEL with Dan White. He brings you On the Money. That's at 7 a.m. Sundays on 101.7 FM, 1150 a.m., and streaming live at WDEL.com. Dan Simon, I enjoyed talking with you, sir.
So, Rick, Dan's going to be talking about Roth conversions after the big, beautiful bill. So I think, some of the things he's going to get into is the standard deduction really has increased especially for retirees, and some room in income tax brackets, whether or not Roth conversions make sense for them. So I'm sure it'll be a good show.
All right, man. They'll be listening for it. Thanks so much. Dan Simon, Dan White & Associates. Take care, my friend.